Welcome to Stock Market Investing with the ARMR Report. I'm Brett Rosenthal. This is the live in-game update we share with ARMR insiders every day at 2:30. I'm sharing it with all of you today. We got a lot to discuss. I wanted to go over these two monster day trades in the triple Qs on Friday and today. It's a combination of the ARMR Day Trading Trigger, which is our engine to day trade, overlaid with SpotGamma information. When those two things come together, highest probability of success. So we put on large trades, and that's how they become monsters. I'll then kind of break down for you how we're looking at today, what it's going to do to the ARMR algorithms. We could have another change at the end of the day today. As the indexes have been arguing with each other, there's been no confluence. But we could be on the verge of confluence, which would get us more aggressive. So we're carrying 30% cash, long 70%. How are we going to put that 30% to work? And are we going to put it to work? I'm going to answer that question. Please don't forget, I'm sharing information I use to manage my own assets. I'm not telling you how to invest. I don't know you. I couldn't possibly give you stock advice for you to go do on your own, right? Because I don't know your risk tolerance. I don't know your portfolio, the dollars you're working with, any of that. But what I can do is share the ARMR Investing Way. It's a process of managing capital where we put ourselves on the right side of probability over and over again when rewards worth the risk. And we do it in a three-stage process. Build our whiteboard of fundamental information for ideas. Use ARMR algorithms, proprietary, to help us execute, know when to add and when to take capital out of the market, and tie it all together with a strong stop loss discipline. That's the process. I hope it helps you. This is today, in my house at least, in my office, bring your daughter to work day. There she is, our trader. You can see she's at the desk, trading away. I don't think we could tear her away from the screen. But if you hear things going on behind me, that's what it is. Okay. So let's jump right into the Nasdaq 100 trades. Okay. So we start off the morning and we look at our day trading screen here for ARMR Day Trading analysis for anybody part of the ARMR Day Trading room, which we like to call ARMR Commodores. Okay. So the ARMR Commodores are in there this morning, and what are we doing? We're putting on trades this morning, first thing in the morning, on the S&P and the Nasdaq 100. So right here, you're looking at our day trading screen for all the indexes. The S&P is on your left, Nasdaq 100 on your right, on the top, okay? Each bar is 3 minutes. It's a 3-minute chart. The blue bars are up bars, magenta bars, down bars. All the lines, with the exception of the purple dashes, are the ARMR Day Trading algorithm, okay? It's based off of primarily the core of it, the nucleus, is the volume weighted average price. What we look for an ARMR Day Trade Trigger is when the asset, in this case, these indexes, are trading above prior day's VWAP. So right here, okay, if we look at the S&P right now, and I'm going to make this a little bigger for you, okay? If you look at the S&P, this line right here is the demarcation point from Friday to Monday. We closed right on the VWAP, this black dotted line. We opened above it. That's step one for the ARMR Day Trading engine. Be above prior day's VWAP. Step two, go above top day VWAP, which we did actually at 9:39, okay? And at 9:51, we were putting capital to where actually we put capital to work a little bit earlier in this index. Okay, so we were getting long the S&P right in here as it was taking out the opening range high. Okay, now it's been ripping higher all day. We've booked 50% of our profits. The primary target was this ARMR moving average, this yellow line. So 50% of our gains are booked by now. The other 50%, we have a trailed stop right below this location, and we're going to let it run as long as it wants to run. The next stop up here are these purple lines, and as you can also see, this teal line right here, this light blue color, is the average true range high of the day. If we get up there, we'll book the rest of our day trade profit. We won't wait for a trail, okay? The third step, so step one, are we above prior day VWAP? Yes. Step two, are we above top day VWAP? Yes. Step three, did we challenge a SpotGamma location? Yes. This purple line is a key SpotGamma location, which happens to equal the opening range low. I love that confluence. That's what gives me the courage to put a big position on. Okay. And I use SSO to day trade. So it's twice the performance of the S&P. Okay. Now, let's look at the same situation on the Nasdaq 100. Here's the Nasdaq 100. Move it up. Okay. What we were looking at today on the Nasdaq 100 as we came in this morning is the same setup. So we're above prior day's VWAP. We gapped up. Look at this. We gapped above SpotGamma location of 315. Now, for those of you who follow SpotGamma, if you don't, we have on this channel, by the way, you can see the highlighted videos, an interview between us and Brent Kachuba, the founder of SpotGamma. One of the things he taught us in that interview is that the volatility trigger is powerful, both above and below. Okay. So when you have the ARMR Day Trade trigger occur right at the volatility trigger, that's when you can get an explosive move higher. And I'm going to share with you how we did that, but do me a favor. My son always reminds me, and he's 7, by the way, that I should tell you, please hit the thumbs up button. All right. If you like this video, let people know on YouTube. It'll help me out. I appreciate it. You can also subscribe to this channel right down here. Got a subscription for you for the ARMR report and for this video. All right. So let's go back to the screen here. So what do we see? We're above prior day VWAP. We gap above the volatility trigger. So we know today could be an explosive up day. We wait for this bar right here, which is the 951 bar that breaks the Nasdaq out of the small pennant formation, taking us above top day VWAP. That's our trigger. ARMR insiders on the day trading desk, we were talking about this. The minute it happened, it's time to get long the Nasdaq 100. You could use QQQ. You could use QLD. You could buy, call options if you want. This asset has just ripped higher all day. What we tend to do when we hit target points, 2 Fibonacci's up, 4 Fibonacci's up, 3. This is a percentage move. Any of these lines you could book some profits at. So at this point, when we're up here, we've booked 50% of our gains. We have a trailed stop right below the low right here. So if this is a double top and it takes out that low, we'll book the rest of our gains. We had a huge day. Now, what makes it a monster trade? All right, first of all, it was a great trade. The market's up big. We made some money. But when I say monster, it all has to do, of course, with position sizing. All right, so some people ask me, how do I make money trading the indexes? They don't move enough. Position size. Okay, I'm going to take a 5 to 10x position size in the indexes versus what I would do in an individual stock. It's that simple. In this particular case, when we get the day trade trigger setting up perfectly in line with SpotGamma information, I have a portfolio and all I do is day trade it. Okay, I had 50% of my account long each index using twice the performance of the index, which means 200% exposure to the market volatility. I'm not recommending you do it. Okay, I don't know you. I wouldn't possibly tell you to take that kind of risk. That would be insane for most people. It's just I've been trading for a long time. I know my strategy. I know my system. The SpotGamma information is like, nitrous, nitro, whatever. It's explosive to our day trading engine. And so I'll put on a big position with a tight stop. The hardest thing to do in this market, in a market that's this volatile, is to recognize you have to stop your losses immediately because your successes don't challenge the stop. Don't believe me? Look at the charts again. Okay? Look at the S&P here. We got the position on. It never challenges the stop, right? So on other mornings where it's challenging the stop, we're out immediately. Same thing with the Nasdaq. Now, I said I'd share with you again, and I did this last week, but I'll just wrap up with a quick, whoops. And then I'll share with you positions that we may be adding at the end of the day today. But I said to you, I would share the trade we did on Friday. The same setup occurred on the Nasdaq 100, which is to say, not exactly the same, it was different, but the market sold off right to the put wall on Friday. Now, again, you can watch this video on our channel. It's the highlighted video. It's an interview between us and Brent Kachuba. And one of the things he said at SpotGamma, when I asked him, what's one of your favorite trading techniques using SpotGamma information? His comment was, the put wall can be an explosive place to put a long trade on because put buyers notoriously book profits quickly because of the decay. When they start booking profits, they're selling their puts. The dealer's buying the put and covering their short, which means they're buying the market. Okay, they're buying the put and buying the market. Doesn't have to be covering the shorts. Buying the put, buying the market. Okay, so that they have a natural hedged position there, right? They're buying puts, so they turn around and buy the market, so they have no risk, right? They're just a market maker. And that's what drives the market higher. So when you hit that put wall and they start selling their puts, booking a profit, and the dealer's buying the puts, the dealer's also buying the underlying. Okay. And that's what that trade was on Friday. So what makes the monster trades is the size of the position when you're trading indexes, or if you're trading index options, it's up to you. All right. Now let's talk about, let's talk about what we're going to do here at the end of the day and look at some positions before I split. But let me just remind you, if you want to be part of the day trading room with us, consider becoming an ARMR insider at the Commodore level. Take a look, and I can list it for you. You can just go to the armrreport.com, ARMRreport.com, and check it out. It might be something that interests you. So where do we go from here? So I just wanted to show you the setup of the Nasdaq 100. Okay, it's very possible the Nasdaq will put on a ARMR algorithmic buy signal right here at the end of the day today as it crosses above the 50-day moving average, and we'll see this as a higher low, double bottom, higher low. Double bottoms don't always look exactly the way you want. Okay, in this case, it's a higher low. Great. Rallied to the 50, failed, but held it, broke back above it. If that holds all day, we may have a risk on entry point in the NASDAQ. Now, what's frustrating about that is we still don't have confluence because the S&P this morning, before the market even opened, the ARMR algorithm said caution on the S&P. Okay, so you still have cross currents that don't make sense in the market from an ARMR algorithmic standpoint, right? So we have 7 indexes. We have algorithms for each. We're looking for confluence. When they all go in the same direction, that's when we get aggressive and start buying aggressively. When there's no confluence, we're more conservative. We're looking for other ways. We're carrying cash like we are right now. So I don't know where we're going to be at the end of the day. And it may not be today. It may be at the end of the week we get a risk on entry point in the NASDAQ 100, and the S&P confirms it. If that's the case, we'll put all of our cash to work. I don't know if that's the case. We'll have to wait and see, but here are some of the stocks that are at the top of our list. Okay, so if we get a risk on entry point, we're going to be looking to add more NASDAQ 100 type of names. Last week on weakness, we were adding to Facebook. So you get an idea of what we're doing with our portfolio. We bought Facebook right here. We added to it on the next day on weakness. It's only been up ever since. Okay, so we've got some NASDAQ 100 names in the portfolio. We're building a position in Microsoft. It continues to hold the 50-day moving average. It's outperforming most of its peers. Okay, we own some shares of Micron, taking a little cup and handle and a nice uptrend. Doesn't even know the NASDAQ was down. We added some shares of Intel. Intel's breaking out. Okay, so we may continue to lean in this direction to help balance out our portfolio against other positions that are more industrial related. And I think what we're going to do is focus on this chip shortage, right? So names like Xilinx, don't forget Xilinx is being taken over by AMD and it's trading at somewhere around a 10% discount to the takeout price. Don't quote me on that. I have to go do the math again every day, but it's somewhere around that. So if you like advanced micro devices, you got to love Xilinx. If the deal goes through, it goes up another 10%. Right? That's just a no-brainer right there. Double bottom on the 200-day moving average, making a higher low. It looks just like the Nasdaq 100. So if we get the Nasdaq 100 breaking out, I'm looking for chart patterns that look like the Nasdaq 100, that will follow through just like it. Okay? How about NVIDIA? NVIDIA and Xilinx are chips that are found in cars, and we have chip shortages. Okay? We also like QRVO. This is a 5G chip company. It's a nice little cup and handle. It's held up much better than the rest of the technology space. Breaking out of a bit of a pennant, had blowout earnings last time. That's a great idea. Okay? We constantly try to find our way back into DraftKings. The cup and handle, this is an incredible chart pattern for a disruptive growth stock while the rest of the disruptive growth stocks are being destroyed. The relative strength here is phenomenal. So I continue to try to find my way in there. How about apps? I'm trying to find some disruptive growth stocks that have held up above the 50-day moving average, that are in tight pennant formations, and that have nothing to do, this is the key now, I'm not buying stocks that have to do with 2020 pandemic. Peloton, Zoom, those type of names. They might go up, but I don't want to focus, Teladoc, I don't want to focus on those. But if I can find some names that run with that pack, that have held up a lot better, relative strength a lot better, and that are going to perform this year having nothing to do with the pandemic. I mean, apps has nothing to do with the pandemic. Digital Turbine, if you know what it does, go do your research, you'll find out. It's not a pandemic stock, right? QRVO is a 5G company. You see what I'm saying? So I'm looking for those ideas. So those are my thoughts for today. I hope that they're helpful for you. ARMR Insiders, I know you guys are watching. So any questions you have right now, we'll do some Q&A before we wrap up for the day. And of course, ARMR Insiders, I'll share with you exactly what we're doing in the portfolios at 3:30, 3:45 if I'm making any additions today. If we're holding those day trades we have on that are making money for us. And in this case, every trade we put on today is making money for us. Okay. So we'll have to look at the portfolio, look at the averages. If we're getting a risk on signal, we might hold some. If not, it's okay. We have some great day trades today. Might book those profits and then look to put them out again tomorrow. And then when we get the risk on buy signal from the ARMR Algos, that's the day where we hold the day trades and put them in the swing portfolio or put them in the invest portfolio. So Erez is telling us about Cisco. So let's take a look. Oh yeah, look at that chart breakout. Cisco's that looks great, Erez. You're on the money there, brother, as usual. Erez has achieved ARMR analyst status. And I like to say that we're all at the ARMR report, we're analysts. We're an army of analysts followed up by a tank division of algorithms. That's what I like to say. And Erez is definitely an ARMR analyst. Okay, so there's a nice chart pattern, a nice breakout. We might have to do that. How about this? I'm looking at Infinera. It tends to run with that pack. I wonder if we should be doing that. And how about CIEN, right? So take a look at all those names. It'll be interesting. All right, guys, listen, I'm going to wrap up. I've got to get to our portfolio and building the portfolio out between now and the close if we have to. Thanks so much for your time. I look forward to seeing you guys, ARMR Insiders, bright and early, 8:30 tomorrow morning for the morning call. Any of you guys who'd like to be part of what we do every day, be part of our trading desk, be part of the Slack room, don't forget, you can always join us, armrreport.com, ARMRreport.com. And a thumbs up on this video would help me out. I'd appreciate it, guys. Take care. Have a good day.